Hi everyone, I'm Sharad. I'm a businessman and I've created ample wealth for myself through investing the profits generated through my business. And on this channel, I make videos on personal finance. In this video, I shall be talking about investment. I shall explain what investing is and where all one can invest. And finally, why should everyone invest their money? So the definition of investment is pretty easy. Investment is an asset in which you invest so that you are able to generate a regular income or a capital appreciation for yourself in the future. Regular income can be in the form of interest if you invest in a fixed deposit. And what does capital appreciation mean? Capital appreciation means the asset in which you have invested, it appreciates in value over a period of time. So basically, you invest in an investment. So what all can you invest and where all can you make the investment? You can invest your time, you can invest your effort, and you can invest your money. And where all can you invest? The possible avenues of investment are: number one, yourself or your business, or maybe say shares, equity shares of different companies, or maybe bonds or properties, real estate as they call it. So the basic idea of investment is that you're able to generate a bigger payoff for yourself than the money or the time or the effort that you had initially put in. People normally confuse between investment, trading and savings. So much so that they use these three words interchangeably. But all these three words have different meanings. Investment is different, trading is different, and savings are different. Investing is normally a long-term commitment wherein you invest in the asset for a long period of time and you benefit by the asset increasing in its value over time. So if you are suppose investing on yourself, you can upgrade yourself by learning a new skill. So that is sort of investment. You're putting some money and you're putting some time and effort on yourself and you're getting skill in some particular field. So that is one sort of an investment. Or you can get a fancy degree for yourself which might fetch you better salary. That is again an investment. Or you can invest in shares of different companies and the shares of the companies increase in value over time, over years, over decades as the company keeps growing. Or you can just put it in a fixed deposit and you can keep earning 5-6% interest every year. That is also an investment. So investment is normally a long-term commitment, but trading is different. Trading is more short-term in nature. You try to catch some inefficiency in the market, or you try to read various patterns in the market, and if you are able to see that the market is going to rise or the market is going to fall in the short term, you buy or sell the asset accordingly and you come out of it immediately. Unlike an investment, trading is a full-time job. Okay, so trading, I'm not saying trading is a bad thing, but trading is a profession, trading is a full-time job. Just like you have a doctor, you have an actor, you have a lawyer, architect or a businessman. Similarly, trading is a full-time job where you require skill and where you require 24/7 monitoring of the market. So normally trading is short-term in nature and which is completely different from investing, which is normally long-term in nature, wherein you put it, of course you have to monitor, but it's enough if you monitor it once in 3 months or 6 months rather than being 24/7 on that. Now let me talk about savings and explain to you how it differs from investment. Savings is setting aside the money that you don't use now or you don't require now for some future use. Now even as children, we are used to saving, our parents, they used to give us some 5 rupees, 10 rupees or 100 rupees now and then. We normally used to keep it in a box and once in a month or sometime we used to count and see how much we have collected so far. So that is something like a savings. So in savings, unlike an investment, the amount that is kept in the box, it doesn't grow. But in investment, the amount that you have invested in the asset, it grows over time. So that is the difference between savings and investment. So normally people keep money in their savings bank account for a long time thinking that it is an investment. But mind you, the money in the savings bank account is not an investment. It is just earning a meager return of 3% per annum. So it is just a short-term parking vehicle for you to keep the money till such time you decide where to invest it. I will talk about gambling now. Sometimes the sort of old people or the conservative people, they say investing is gambling. Did I hear someone speaking calling me old? No, I'm not old. I'm a 52-year-old boy. Okay, anyway, gambling is more a game of chance. Okay, so needless to say, it is highly risky. In investment, you expect a reasonable amount of return, market related return. So nowadays equity markets are giving 12-15% return. So if you are expecting a 12 to 15% return per annum over long term on your equity investments, then that is investing. But if you say, okay, I invest say 100 rupees and I want to get 1000 rupees out of it, that normally happens in a casino. So that is gambling. The second point is, if you find that activity boring, then that is investment. And if you find that activity thrilling, then that is gambling. So based on these two things, you will be able to differentiate whether you are investing or gambling. Are investments risky? Yes, absolutely, investments are risky. Now, what is risk-free in life, you tell me? The day you are born, you are exposed to various kinds of risk. You're just walking on a road, some car hits you. So you are exposed to a risk. So that doesn't mean you stop walking on the road. So risk is there in life. We have to embrace the risk. Yes, we have to calculate the risk and we have to take calculated risk on our investment as well. So there are methods by which risks are calculated. Normally people, they use the word English words like high risk, low risk, medium risk, or whatever. So with regard to investments, you should not rely on those English words like high risk, low risk, medium risk. Rather, there are parameters in investments, like there is something called beta, there is something called standard deviation. So using those parameters, you can calculate your risk and you can take calculated risks on your investments to generate good returns. As the saying goes, no risk, no gain. So risk is definitely there on investments and you should embrace that risk so that you get good returns. No doubt, you have to measure the risk and you should take calculated risk. You should not blindly invest in anything and everything which you do not know anything about. Now let's talk about why we should invest. So basically there are two reasons why we should invest. Number one, to increase our purchasing power. So what do you mean by increasing our purchasing power? If you are able to afford something today, what you were not able to afford 5 years back or 10 years back, that indicates that your purchasing power has increased. So investing is one of the best ways by which you can increase your purchasing power. And the second one is, you should invest to create an additional source of income for yourself. You start working, say, from the age of 20 or 25 and you work till the age of, say, 60, and after 60 you retire. In the initial period, you should be working for your money. You should put in your effort and time and skill, and you should be working for money, and over a period of time that money should start working for yourself. I'll give you an example. Now suppose you are a 30-year-old and you decide that you want to save for a retirement. You retire at 60, so you have 30 years of time to invest and save for your retirement purpose. You decide to invest, say, 5,000 rupees per month for the next 30 years. Say you invest in a mutual fund and that mutual fund generates a 12% per annum. 12% per annum on an equity fund is easily achievable. So you are investing 5,000 rupees for each month over a period of 360 months. That works out to 18 lakhs of rupees. Now this 18 lakhs of rupees, if it grows on a rate of, say, 12% per annum, you know how much wealth you would have generated for yourself when you turn 60. The wealth would be something to the range of 1.76 crores. So let us round it off to say 1.8 crores. So you have invested 18 lakhs of rupees only. Your investment has grown to 1.8 crores. So you get the point. You have just invested 10% of the wealth that you have generated. So that means you have worked only for the 10% of the wealth that you have generated. So you will be able to appreciate the fact that by investing small amounts of money over a long period of time with a reasonable good rate of return, one, you will be able to generate a huge amount of wealth, and two, your contribution for that wealth will be very minuscule. In this case, it was just 10%. There is a famous quote by Warren Buffett, the legendary investor, and it goes like this: if your salary is your only source of income, you are one step away from poverty. So, as you can clearly understand from the quote, you should ideally strive to have more sources of income, at least a second source of income other than your business income or your salary. And there is no better way to create a second source of income than a good investment. So this was an introductory video on investing, and in future I plan to come out with more detailed videos on advanced topics on investment and personal finance. So if you have any questions or any video requests, you can leave it on the comment box. And of course, please subscribe to my channel. I'll see you in the next video. Bye.